We're always looking for real-world solutions to everyday challenges, and today our focus lands squarely on Papua New Guinea. They've just launched a really interesting initiative aimed at making life a little more affordable, tackling the cost of essential household goods.
Exactly. And we're going to dig into this new policy today. It's a goods and services tax exemption, GST exemption, on 13 key items.
Right.
The goal here is pretty clear. Give families some, financial breathing room by directly lowering the price of necessities.
Okay, so this zero-rated GST measure sounds quite significant. In, practical terms, what difference will people in PNG actually see when they go shopping?
Well, simply put, for those 13 specific items, the consumer just won't pay GST at the checkout.
Straightforward.
Yeah, it immediately cuts the cost of those goods. The report we're looking at, it outlines that this initial phase covers, 13 essential household items.
Right.
And, given recent economic trends in PNG with costs rising for basic stuff, this could offer some pretty timely relief.
13 items, it's quite a specific number. What kind of things are we actually talking about? What are people going to notice missing from their bill, price-wise?
So the report gives some key examples. Things like rice, flour, sugar, tinned fish, cooking oil, and soap, too.
The absolute staples.
Exactly. These are the kinds of everyday things that, many households really rely on. It's important to remember, though, these are just examples from the total 13, the really fundamental goods people buy regularly.
Right. The basics.
Yeah.
And when does this change actually kick in? Is it like a permanent thing now?
So the plan is for the exemption to come into effect around mid-year.
Okay, mid-year.
And it's set for an initial run of 12 months.
Just a year to start.
Just a year initially, yeah. But what's interesting is that there's a real possibility it could be extended beyond that.
Oh, interesting. What would need to happen for that extension? How does they decide?
Well, the Treasury Department will be keeping a very close eye on how this whole GST exemption plays out, financially speaking. Their assessment of its impact, how much it costs versus the benefit, that's what will determine whether it continues past the first year. Think of it like a trial period, really.
Okay.
They're evaluating its effectiveness, checking if it delivers before potentially making it longer term.
That sounds like a responsible way to do it.
Yeah.
You'd want to see some solid evidence it's actually working as intended. So how did they even land on these specific 13 items? Was there a sort of long process?
Oh, yeah, it wasn't arbitrary at all. The Internal Revenue Commission, the IRC, they took a pretty systematic approach.
Okay.
Apparently, they started with a much, much broader list, something like 68 items across maybe 30 different categories.
Wow, 68 down to 13.
Exactly.
Yeah.
From that big list, they narrowed it down to the final 13.
And what were the main deciding factors in that final cut? What made these 13 stand out from the other 50 odd?
The main criteria were basically how often households use these items and just how popular they are.
Right, common usage.
Yeah, the focus was really on goods that are consistently bought and used by households right across PNG. It's just a pretty clear strategy to, maximize the impact on people's daily budgets.
That makes a lot of sense, target the things people actually buy the most. But how do you get a proper handle on that? Do they just, look at overall sales figures?
They actually went a step further, which is quite smart. The IRC proactively conducted surveys with the businesses selling these goods, so retailers and wholesalers.
Ah, okay. Direct feedback.
Exactly. The whole point of these surveys was to get that firsthand info on which specific brands and even sizes of these essential items are the biggest sellers.
Gotcha.
This helps make sure the GST exemption applies to the products people are genuinely picking off the shelves.
That's a really practical way to ensure the policy hits the mark. You don't want an exemption on some obscure brand nobody buys.
Precisely.
So once these 13 items are confirmed, the exemption's live. How will shoppers know which ones are which? How do they easily spot them in the store?
Yeah, good question. The IRC has a plan for that, too. They intend to provide images of the actual GST-free items.
Oh, pictures?
Yeah, pictures. The idea is to create a really clear visual cue for shoppers, make it straightforward to see which products are exempt right there when they're doing their shopping. That should really help avoid any confusion at the checkout counter.
That is a really practical touch. That'll definitely make a difference for consumers navigating the aisles. Now, flipping it slightly, what about the businesses? How does this affect them? Especially if maybe they've already paid import GST on stock that's suddenly exempt?
Yeah, the report addresses that directly. Businesses that have already paid that import GST on these goods, the ones that are now exempt,
Right.
they'll be able to claim that cost back. There's a mechanism called an input credit.
Okay, input
It
credit.
basically, yeah,
Yeah.
it allows them to get a refund or like a reduction on future tax they owe to cover the GST they've already paid on this specific stock. There'll be a defined transition period for this, so it helps ensure a smoother changeover for the businesses involved.
So it's not just focused on the consumers. There's a process to support businesses through the shift, too. That seems fair.
Mm-hmm.
You mentioned earlier that this kind of approach, zero rating essentials, isn't entirely brand new. Are there other places that have done something similar?
Yes, absolutely. The report specifically flags Fiji as a relevant example.
Oh, right next door, practically.
Exactly. Fiji actually have a zero-rated GST on an even broader list, 22 household items, I believe.
22, okay.
Yeah. So that provides a useful sort of benchmark or point of comparison for P&G as they roll out and evaluate their own initiative. It shows that using targeted GST exemptions is definitely a recognized tactic for tackling cost of living pressures, especially in the region.
It's interesting to see that precedent so close by. So when you boil it all down, who is this policy really designed to help the most? What's the absolute core aim here?
The primary goal, and the report makes this very clear, is to provide much needed financial relief specifically to low-income households.
Right.
These are the families who, feel the squeeze the most when the prices of essential goods go up.
Mm-hmm.
By making these necessities just that bit more affordable, the government hopes to ease some of that financial pressure on those who need it most. For a family really struggling to afford their basic weekly shop, removing the GST on these items, it's like getting a small but consistent discount on the things they absolutely have to buy.
Okay, so just to kind of wrap that main part up, Papua New Guinea is bringing in a GST exemption, 13 essential household goods, like in rice, flour, cooking oil, that sort of thing.
Yeah.
Starts mid-year, runs for 12 months initially, but could get extended depending on how it goes financially.
Right.
The items were chosen pretty carefully based on usage, retailer feedback. Shoppers will get visual aids, like pictures. Businesses have a way to claim back tax already paid through input credits. And the big picture goal is helping low-income households, kind of like what Fiji is already doing with their albeit larger list.
That sums it up really well. It seems like a well-considered approach, trying to balance the consumer experience with the impact on businesses too.
So what does this all really boil down to then? I mean, it sounds good on paper, but will it genuinely make a tangible difference for families on the ground? That's always the key question, isn't it?
It absolutely is. And the real impact will likely hinge on a few crucial things. Firstly, how effectively these tax savings are actually passed on to consumers through lower prices at the till.
Right, no price gouging elsewhere.
Exactly. Then there's the overall stability of the PNG economy during this period. Other factors could influence prices too.
True.
And ultimately, it comes down to the actual amount of money saved by those low-income households. Is it enough to make a real difference? The Treasury review after the first year, that's going to be absolutely critical for judging the long-term effectiveness and, well, the future of this measure.
Definitely one to watch closely over the next year or so. Now, for you listening in, thinking about that initial list of 13 essential items and the way the IRC, went about selecting them, what other household goods do you think would have a really significant positive impact if they were perhaps added to a list like this in the future, maybe in P&G or elsewhere? And what kind of factors do you imagine the Treasury Department or a similar body would be carefully weighing up when making those sorts of decisions down the line? It's certainly something interesting to ponder.